We're looking at an investment alert for Rezolve AI, ticker RZLV.
Yeah, this is the one with the big headline. Why this 3AI play could 3x your portfolio? It's a very bold claim.
It is, and the whole thing is built on this idea of a massive valuation gap. But right away, it's labeled high risk, high reward.
And that brings us right to our first critique. You have to refine the thesis presentation to really, fully integrate that risk and reward.
Exactly, that tension is the key. The material makes a really strong case for the upside, for that potential $10 plus target.
But the structure's the problem. All the significant risks, the negative operating income, the cash burn, that very high beta of 2.0, they just feel isolated.
Right, they're in a separate disclosure section.
It feels like a liability footnote, not like these are fundamental hurdles the company absolutely must clear to succeed. It just weakens the whole argument.
So the suggestion isn't just to mention the cash burn. It's to integrate that execution risk directly into the valuation story itself.
Yes.
Make it clear that the current undervaluation, the company trading at just 2x its projected 2026 ARR, exists precisely because of these challenges. The risk is the reason for the discount.
That's it, exactly. You have to show, with concrete examples, how solving the negative cash flow is the main catalyst here.
So you're connecting the dots.
You have to. You demonstrate how conquering that cash burn is what gets the stock from $3 to that, mathematically justified $10 target. The risk management becomes the core of the bull case, not just some disclosure you have to include.
Okay, so we've talked about strengthening the floor of the valuation by weaving in the risk. Now let's look at the ceiling.
The growth.
The growth. That forecast is, well, explosive. It jumps from a $150 million ARR exit rate in 2025 to a $500 million exit rate in 2026.
A huge leap.
And that huge leap brings us to our second critique. You've got to bolster the connection between their proprietary tech and that exponential growth target.
That $500 million number in a single year. That's not just growth. That's a massive land grab. It's huge market capture.
Right. And right now, the piece leans very heavily on their proprietary brain suite and that enterprise-safe zero hallucinations feature.
It cites the big clients, Ferrero, H&M. But the weakness is that the analysis just kind of lists these things. It reads like a feature list.
It doesn't rigorously define why these specific features are going to let them capture $500 million in ARR that competitors can't touch.
Exactly. So the suggestion here is to really deepen that qualitative analysis. Contrast RZLV's Agentic commerce and brain checkout system directly against what's already out there.
Show how these specific features solve enterprise pain points at a scale that actually justifies that 10 to 20x growth multiple. The tech has to earn the financials.
Right. And to make that actionable, you have to move beyond just saying zero hallucinations.
Okay, so give an example.
For instance, provide some real context. Show how the enterprise safe feature maybe cuts the typical enterprise sales cycle by 6 months, or how it unlocks massive deal sizes in, say, highly regulated industries that competitors just can't get into right now.
I see. So you're creating a direct mathematical link between that technical moat and how fast they can grow ARR.
You have to. That's what makes the forecast believable.
This has been a really helpful breakdown for tightening up this RZLV investment alert. So, to summarize.
Go for it.
First, integrate those risk factors directly into your valuation narrative. Make the execution solving the cash burn the primary catalyst for the stock moving from $3 to $10. And second, make sure your analysis of the proprietary tech is rigorously linked to the financial outcomes. You need to prove how the brain suite is truly robust enough to validate that extremely ambitious $500 million ARR forecast for 2026.
Great summary.
We really encourage you to implement these changes and then submit your revised work back to us for a follow-up critique.